Welcome to Markets Now. I'm Michelle Rook along with Rich Nelson from Allendale. And we did end with mostly lower prices over in the livestock, with the exception of some of the feeder cattle futures. But over in the grain side, a mixed day. Corn and wheat lower, soybeans to the plus side. And Rich, how much of the pressure that we saw in corn and wheat was just the funds taken to the sell side here because of the poor exports and some of this rain that we had overnight?
I've got to say, certainly for the short-term issue, those are very pressing discussions. This week's kind of theme is going to be the bear news gets the headwinds right now, and as it stands right now, export sales corn side 52% below the 5-year average, soybeans 77% below the 5-year average, and these were 10-year lows for weekly soybean sales. So as we have this discussion about maybe changing weather into next week and the end of May, this market is still looking at short-term bearish news here.
Yeah. And what about as far as the corn market? We did actually take out some major support areas, especially in the new crop. And some of that is still just this bearish expectation that we have for the WASDE tomorrow, isn't it?
It certainly is. And USDA is going to use that March planting number for both corn and soybeans. They're also going to use trend yield on this report as well. And though a lot of our producers may disagree with that view, that's what they will be doing for this report here. So we're going to see a pretty big number posted for new crop sales or new crop stocks tomorrow, roughly about 2.1 billion bushels. Soybeans up near 300 million bushels. So until we get the focus back on longer term weather into summer, we certainly do have this overhang right now.
Yeah. Will we focus at all on the production numbers out of Brazil, or have we pretty much got those baked into the market already?
I do think in the trade's mindset, as far as the Brazil numbers, which the trade expect a small bump higher, I do think the trade's mindset is probably a minor issue. Our main focus right now is the simple fact that going into this report and certainly going after, Brazil's been having a pretty good price discount versus U.S. corn and soybeans. So what USDA shows here tomorrow is an issue, but keep in mind the trade's mindset, the export sales discussion is kind of locked in here.
Gotcha. What about the soybeans, though, as far as the rebound that we saw here today? It was kind of tied to the meal market. Was that tied to this lower Argentina production number out of the Rosario Grain Exchange or not?
I do think that was certainly an issue, and in the trade's mindset, this is still pressing. One thing to keep in mind here, as far as soybeans, and like we mentioned before, I do have concerns about this. Maybe change in weather pattern from this week's beneficial range in the West. Perhaps the next couple weeks might be turning a little drier. So I think the soybean market, yes, is recognizing some bear news, and it does have to in the short term. But the key issues for us up ahead are the simple fact that we do have some yield concerns as we still have this Pacific Ocean temperature issue as being a pressing concern for weather in the coming months.
Are you in the camp as well, Rich, where you think we're going to get some PP that might knock some of those soybean acres down or not?
I do think it's something to discuss, but I'd probably have a little more concern about this maybe at the end of the month, maybe as we go into June. I think a lot of these planning discussions, which in the north do center around corn here right now, and that will be the case for the next 2 weeks. I do think the focus probably will be on the soybean side, maybe later on. So I'm not changing acreage numbers just yet, but we'll certainly have to watch.
So we also have, as far as the wheat, we had low exports, as you had mentioned, but let's also talk about the expectations in the WASDE, because when you look at ending stocks from this year to next year, you don't have a big change there, even though production, we may see a little bit of a difference from year to year on that. So where do we get that?
That's a very good point here. So our discussions on the production side, we will have this bump up in numbers. Obviously, we have some clear concerns about abandonment here for winter wheat, which USDA will recognize on tomorrow's report. Also concerns about yield, and that's a very valid discussion. But we will, in general, just based on acreage still, have a net increase on the production side. So the concern here right now is that on the ending stock side, we're simply leading into this year with a smaller beginning stock. So we do have some offsets to what has been a slight bump up in production here this year.
So you mentioned abandonment, and there's talk of maybe as high as 25% abandonment in Kansas, 40% in Oklahoma. So how do you come up with a bigger production number? Or do you think that we'll probably see the market have to adjust that going forward?
There are two issues. Number one is that acreage overall. So even including the hard red problems, which are very, very valid, even including those, the higher acreage for this year, as well as what has been an okay crop year for soft red areas, as well as our concerns about spring wheat are still quite present. But the question is, when will USDA show that, as far as which month would that really be addressed? So that's the issue for right now. We still have good soft red production, and USDA is probably still going to sock us with a good size spring wheat production, which will be in future reports curtailed.
Do you think we're going to see a lower production number out of the Kansas wheat tour next week?
As far as that goes, I do think we probably will see some numbers which get a bit of concern here for us. Main issue is a lot of the producers have made it very clear that as far as this recent moisture, it may not do a whole lot to actually change the general narrative here as far as hard red. So I do look for concerning numbers here, no doubt from that tour.
And did the outside markets have an impact on the grains today in terms of money flow? Because we did have crude oil lower, the dollar index higher. So what's going on there?
No, I do think in some cases we do have some concerns there. We obviously have rebounded a little bit on as far as lows here from the on the crude side. We've got roughly 50% of that bearish break in recent days recovered, but can we go much higher from here? So I do think there's a little concern here for this outside market presence, as we still have people saying that yes, crude oil needs to go much higher by the end of the year. So far, we can't make that story as far as right now pricing.
Yeah, it certainly has an impact, though, on money flow. What about cattle? We had two-sided trade here today in the live cattle futures, but in the end, the lower cash trade looks like it kind of won out and pressed the futures lower.
It certainly did. And we saw some trades here in the north about 280 right now. So down about $1 on a dress basis versus last week. So we'll have roughly 4 weeks now from our peak in cash cattle prices. Also, wholesale beef has dropped in about 7 of the past 8 days. So you can make a claim for perhaps slightly lower pricing in the coming days. Maybe fill that gap on the June chart at lower prices. But keep in mind here, a lot of us will have questions about how much lower this market can go in the grand scheme of things here.
Yeah, it seems like we throw a lot of negative news, though, at the market, Rich, and it still really is very resilient. So if we get a break, it should be maybe a short-term break, you think?
I do think so. Keep in mind here, as far as seasonals, usually we break all the way into the month of July and August. This year, though, based on those lower placements from fall, which will really start showing up around July, we only look for this break to last for just a few more weeks. Keep in mind, typically we have a 10% break from spring highs to summer lows. That would get you a live price of 157 in the plains. This market is still drawing line at perhaps a 6 or 7% break at the worst, which I do agree with. So yes, lower trade the next few weeks, but it's going to be limited here.
Yeah, and futures are already at a discount, so that should help out as well. Got to ask you on the hogs. We started off the day higher, and we had put in a reversal here. And I just wonder, do you think it was because of the Prop 12 decision? Was that like a negative psychological impact on the market?
It certainly is. And the market had to trade this negative news, which is a very valid issue. And we were down in the morning pork report as well. So, yes, in the short term, this market certainly had to recognize this issue. Keep in mind for this hog market, though, we've already priced this into the grand scheme of things. Cash hogs are running 26% below last year, even though recent pork production was only about 2% over last year. So the main issue is, yes, this was an issue which we had to price in for today. But in the grand scheme of things, we would have pricing this in for several weeks here.
Yeah, and we still got to get cash to catch up with the futures. It's pretty simple.
That sure is right. And this market is pricing in that idea that cash hogs will gain roughly about 40 to 50 cents each day from here as we go into June. So this market does hope for more or less a small limp higher into summers. Maybe not a major summer peak, but the market is pricing in some seasonal support right now.
All right. Thanks so much for your analysis, Rich Nelson with Allendale, and that is Markets Now.